In a significant policy shift announced today, the president has dramatically altered his administration's approach to international trade tariffs, specifically targeting China while easing pressure on dozens of other nations. The statement posted on his social media platform declared, "Due to China's continued disregard for global market principles, I'm immediately elevating their tariff rate to 125%. Eventually, Beijing must understand that exploiting the American economy and international markets is neither viable nor acceptable going forward." The announcement contrasts sharply with the administration's broader approach to other nations. Considering that representatives from over 75 countries have contacted various US departments including Commerce, Treasury, and trade representatives seeking resolution on matters of trade barriers, tariff structures, currency practices, and non-monetary trade restrictions, and following my guidance, have not retaliated against American interests, I've authorized a temporary 90-day suspension with a significantly reduced universal tariff of 10%, effective immediately. This represents a remarkable policy reversal after days of asserting the administration would maintain its comprehensive approach regardless of market reactions or political pressure. Capitol Hill sources indicate mixed reactions among lawmakers. While public statements from the president's party have expressed general support, behind closed doors there's significant concern. Many representatives report escalating calls from voters worried about retirement accounts and small business owners alarmed by potential supply chain disruptions. One senior legislator, speaking on condition of anonymity, acknowledged the growing anxiety. The volume of constituent concerns increases daily. This message has been communicated to the administration with increasing urgency. The lawmaker added that presidential economic policy could pivot rapidly. With just a single social media announcement, market trajectories can completely reverse direction, as we're witnessing now. This volatility creates challenges for congressional allies who have repeatedly requested clearer guidance on the administration's endgame. "We consistently hear the same question from party members," our source explained. They acknowledge the president's authority to implement his economic vision but desperately need insight into the strategic endgame. The concern stems from the perception that decisions appear improvised rather than following a comprehensive economic blueprint benefiting America long-term. Financial markets responded immediately to the announcement, with the Dow Jones Industrial Average surging back above 40,000 after several days of substantial losses. Prior to today's tariff tensions, the index had reached approximately 42,200 before beginning its decline. Economic analysts note this represents the administration taking a more targeted approach toward China while offering concessions to traditional trade partners. The presidential statement specifically highlighted China's lack of respect toward global markets while extending negotiation opportunities to nations that approached American trade representatives. Wall Street's positive reaction reflects relief that a potential worldwide trade conflict appears averted. Both Republican and Democratic legislators will likely welcome this more focused strategy, as bipartisan consensus has long viewed China as engaging in unfair trade practices. However, questions remain about implementation details. The administration had originally presented these tariffs as essential to rebuilding America's industrial manufacturing base by incentivizing domestic production. Critics question whether targeting only China while pausing broader tariffs will achieve those stated goals. The sudden reversal also introduces policy uncertainty. After a week of firm declarations that the administration wouldn't modify its approach, today's dramatic shift raises questions about future economic policy stability and predictability. Technical details also remain unclear. The initial tariff announcement featured complex calculations ranging from 20% to 46% for different nations, with limited explanation of methodology. Today's flat 10% rate for the 90-day negotiation period simplifies this structure temporarily, but leaves unanswered questions about long-term implementation. Economic experts express skepticism about practical negotiation logistics. With 75 countries simultaneously seeking trade resolutions within a 90-day window and no clear published list of American priorities or demands, achieving meaningful agreements presents significant challenges. Nevertheless, market participants welcomed the announcement as it appears to remove the immediate threat of across-the-board price increases that would have accompanied the original comprehensive tariff plan. The president is expected to address these developments later today during previously scheduled executive order signings and a championship sports recognition ceremony.